Hello and welcome back to our Brighter Minds YouTube channel. We have seen a heightened volatility in recent days in global markets and also in the Indian market. We will look into what is causing that volatility across the world and how the market is looking ahead and what are the factors behind the recent volatilities and what could change in the future. Let's start to our presentation. So first, we will understand why this is there is so much volatilities in the market. So there has been we have seen that there has been record inflation in US in the March, and that was around 8.4%. So to counter that, US Fed has raised interest rate by 50 bips to 0.75% to 1% range. So basically, the yield are hardening in the US, and also it has guided that it will reduce its balance sheet. That is also a point of concern from the liquidity perspective. So this hardening of the yield has wreaked havoc on the global markets, and every country is trying to position themselves according to it. And there is also some strength in the dollar index, so that is also causing some volatility in emerging markets. We have seen that whenever dollar index rises, there is flight to safety, and money moves to dollars, and obviously that creates a kind of volatilities we are seeing in emerging markets. So now let's have the look on other factors also, particularly from Indian market point of view. We have seen that India has also positioned itself to the rising yields, and we have seen surge in Indian yields also. So in the we have seen that there is 40 bips rise in emergency meeting by RBI few days back. So that was a signaling factor that we are going into hardening yield kind of a scenario going further. So obviously from that perspective, we have seen that FIIs has been continuously selling in Indian markets, and obviously the sell has been higher than ever since last many years, might be 15-20 years. So what is the outlook after that? FIIs continue to sell the same, or do they return back to Indian markets? So basically, whenever we have seen that there is such kind of fierce selling from FIIs, they usually come back after the improvement in the fundamentals, and market rallies hard beyond that. We can see from these slides also. So this slide itself speak volumes about that. So history says that whenever FI outflows rise to such levels, usually it's a good time to buy Indian stocks. So obviously, market has fallen very sharply today also. So if you take that, how they see the emerging market and what are their positioning from valuation perspective. So we have seen that due to recent corrections or recent selling, the emerging market valuations have emerging market P valuations have come to very reasonable levels. So there is chances of reversal from these levels, and obviously there is money flow to the emerging market also. So there is high probability of being so. So we let's move to the next slide. We can see that India's after such hard selling from FIS side, we have seen that Indian P forward P has come to the reasonable level of 19.4x, and obviously that is the median average forward earning of India in last 10 years. So we are around the average mean levels of the valuations. So valuation has softened also. So that is also a point that there is some softening in the valuation also, which has ran very hard in past few months. So from that perspective, we also see that the ROEs are improving in the Indian corporates. So overall, the trend in Nifty ROE is also improving, and there is also a forecast that it will continue to improve in future also. So that will also give a strength to the current valuations, that it will most more likely to be sustainable, or it will sustained going forward. So let's move to the next slide. We will see here that obviously the earnings uh, drives the long term valuation of anything, whether it's a stock or uh, a stock, whether it's a stock or index. So the earning picture is pretty so far, but most of the companies has declared earning uh, till date. So if you see that there is 23% rise in operating profit growth, and there is a strong growth in revenue also. So India still remains the growth market. So obviously, whenever they want to come back to emerging market, India is has positioned itself to the topmost of that. So now let's go to the next slide. We will see that many things are improving on the ground in India. So there is consumer sentiment, there is manufacturing PMI, core industries growth, and household uh, bu- uh, buying of consumer durables, car sales, but whatever high frequency data we will see, uh, we can see, and that is pointing towards recovery in the Indian markets. So fundamentally on the grounds. And now let's have some other points also, that we know that we are going into the monsoon season. So so far the forecast has been that this year the monsoon is going to be normal. So that is also a positive relief from Indian perspective, because our most of our agriculture farming are dependent on monsoon. So that will also boost rural earnings, and obviously drives the earnings for many companies that are dependent on rural. And there is also we have seen that LIC IPOs has concluded yesterday. So it has gathered 3x money that it wanted. So that is also a good thing, because that gives money in the hand of the government. So that will also help out the government in managing the fiscals. Although the government has said that they are not going to cut down on their spending. And they are also planning some more disinvestments. So like SCI, they have given that they will move forward with shipping corporations disinvestment. So these factors are going to help curtailing the fiscal deficit to certain extent. So basically, from that point of view, we believe that these are the right time to get invested into the stock market, because valuation has been soft, earning has been good, and the outlook on uh, from monsoon perspective, from rural earning perspective, uh, that is quite healthy. So at these levels, we think that the probability of you know uh, earning good returns on your investment is higher. So these are the times one should look at investing into the market. So that's from our side. Thank you.